Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we have another edition of Deal Debrief, where we get the download on recent transactions from the people who put them together. On this episode, we're discussing Brookfield's recent acquisition of Generator, a hostel owner and operator with 15 locations and more than 2,800 rooms across Europe. Lauren Okada-Young and Li Zhang from our real estate group are here to share hospitality sector trends and the opportunities ahead for the hostel segment. Lauren and Lee, welcome to the podcast. Just to kick off, can you all introduce yourselves and tell people what you do at Brookfield?
I'm Lauren Okada-Young. I'm a managing director in the London office, and I'm responsible for European hospitality and housing investments. I joined Brookfield over 13 years ago in the real estate investments team back in New York. I then moved over to London in 2016, and I've been part of building out the European real estate platform, which includes investments such as Student Roost and Eden, amongst others.
My name is Li Zhang. I joined Brookfield in 2016. Similar to Lauren, I started in New York, but spent quite a bit longer out there. So I relocated here in 2022 and have been in London for about 3 years now. And my focus is purely on the acquisition side for lodging across Europe.
Great. We're going to dig into Generator, which obviously has a more recent transaction for your team. But just to set the stage and to give our listeners some context, can you all just help us understand what is Generator as a company? What do they do?
Generator is a leading European lifestyle hostel platform. Today, it has 15 assets spanning across 10 countries, primarily in Europe, and totals around 2,800 rooms. And most of its focus are in the key gateway urban cities in its respective markets. The portfolio, I would say, is mostly owned assets and freehold and includes the likes of Paris, London, Dublin, Berlin, and Rome. And it's an interesting business model in that it's a mix of a hostel and a hotel. So 38% of the rooms are private and the rest are shared beds that are sold on an individual bed-by-bed basis. What makes this different than some of the other hostels out there is that it's a more premium concept and more lifestyle-oriented. So it's design-led, it has a strong F&B offering, and it really serves as a social hub for a younger audience of social and group travelers. And at the same time, with its larger bed counts in some of the rooms, both private and public, it also caters well to families that are seeking a good value proposition. The hostels also work for education and sports groups, given its affordability, and it creates some counter-cyclical elements in its demand source.
I think what's really interesting about Generator's assets is that they're design-led and have these popular restaurant offerings, vibrant social hubs, and so they do tend to attract a younger audience of solo and group travelers, but to Lee's point, also can cater to travelers of all ages and demographics. I think what's really interesting economically about the model is that by selling by the bed or the room, it inherently means that the offering is affordable and it's accessible for a variety of different guests. So all the properties are well amenitized with these vibrant F&B and social outlets, which create a strong experience for travelers. It's something that we've been monitoring on a broader basis within Brookfield. The space of hostels in Europe and globally is quite fragmented. So there's very few groups that own and or operate more than a handful of properties, which provides an opportunity for Generator to be quite visible and has really made it a pioneer in the space that we already have 15 assets with this type of reach across the gateway cities. For Generator to have 15 locations and to operate across 10 countries, there are very few other groups that have anywhere near that scale. As I mentioned previously, most of the other hostel operators are either one-offs or they have maybe a portfolio of 2 or 3, maybe 5 assets. And I think in addition to that, Generator also tends to have larger assets, which generate economies of scale in terms of efficiencies and operational scaling. So I think it lends itself for dominance in the market now, but with an opportunity to further pursue growth given that brand name.
You mentioned counter-cyclical elements, and obviously travel in particular coming out of the pandemic years has been a really transformative trend. And frankly, there's been a whole host of dynamics that probably we haven't seen in quite some time, in particular in that sector. So it would be helpful also to talk a little bit about that context relative to this business and fundamentally how that's really changing this segment even within the overall sector.
Since the pandemic, we've seen what we like to refer to as the new normal, with consumers seeking experiences more and more over their pursuits in material goods. This has driven a huge demand in European hospitality and across the leisure industries as well. So if we look at Europe post-pandemic, we observed highly favorable demand fundamentals across the hospitality sector. And we start to see Europe continuing to attract more and more travelers and consumers as a vacation destination. We expect that the consumer spending going forward will continue to go towards European hospitality and that will continue to grow at healthy levels, which has translated for our sector into healthy growth. While the rate of consumer spending on European hospitality is expected to nearly double between 2024 levels to 2029, 2030, this is translating for us into healthy average daily rates, or ADR, which is a common metric that we use to value the top line of hotel performance. And we're starting to see this particularly in upscale and upper upscale classes.
We have some context now about the space in general and hospitality broadly. How did we think about Generator in the context of Brookfield, and what made us particularly interested in this space and this deal opportunity?
I think this is a space that we've always been interested in, and for quite a number of years. Actually, this is the first deal that Lauren and I worked on collectively, and it was about 7 years ago, I think. And then we proceeded to look at it multiple times over the past 7 years before we finally had the chance to acquire it. So it's a sector that we've studied closely and followed for quite a while. And one of the things that Lauren mentioned earlier really resonates, which is it's quite a fragmented sector when you look at it today. So the amount of at-scale, larger, more institutional quality owners and operators within the hostel sector is relatively limited. I think Generator was one of the few operators that was really running this well, and it also differentiated themselves from a brand perspective and really being early into more of the design-led, experience-oriented brand component, and also really focusing on these larger urban destinations. So we really like those aspects of it. And over that period of time, we had a chance to build a strong relationship with the management team. And when we finally had a chance to acquire it, we went through a public bid process towards the end of 2024, ultimately lost, and had assumed that the other buyer was going to proceed forward and buy the company. And then in February of this year, we got a call saying that, hey, the buyer isn't proceeding forward. Would you guys be interested in re-engaging? And I think that's where our reputation as a counterparty that can move quickly, can transact, especially with complex investments like this one at scale, really help keep us around the table and forefront in terms of sellers and advisors' minds when things don't necessarily work out. So from February, we effectively re-engaged fairly quickly, and from a standing start, went on an all-out sprint and managed to close this over the course of the summer. So I think it's a good example of what Brookfield does well and why we've been able to ultimately buy some of these companies.
You just gave a really helpful preview of why we were a great match ultimately for Generator, especially when the opportunity came back around unexpectedly. And I'm wondering how we might define why Generator's business and ultimately the fundamentals are a good match for Brookfield and how we like to invest. Can you tell us a little bit more about that?
Generator has exposure to key European markets that have high barriers to entry and very attractive supply and demand fundamentals. And that's coupled with, on a go-forward basis, a pretty high growth expectation. The business is focused on quite a resilient model, which is operating in supply-constrained markets, and it benefits from strong counter-cyclical demand, as we mentioned earlier, which is also coupled with demand from group travelers to supplement the transient leisure guests. The company's operating model is quite efficient from the perspective that it has a of-scale brand that outperforms other properties in a fragmented market. So Generator actually competes from a pricing perspective against upscale hotels through the sale of their individual beds in shared rooms. So for instance, the shared room rates at a Generator typically average about 30 per bed. That means that if you have 6 beds in a room, you can generate a revenue per room of 180 euros. But with those 6 people sharing a room, they're likely to also use the common spaces, spend at the F&B outlets, and contribute to an overall higher total revenue per available room, which makes this business model quite economically attractive.
And I think maybe the other thing worth adding on to that is because it's such a good business model, we think it works well for both the consumers, but it also works well for real estate owners, not just ourselves, but also external constituents. And so when we think about looking forward, the potential for the company, we think it's a great existing portfolio of assets that we've bought from a real estate perspective, but there's also significant growth to be had because this business model can be replicated in other assets, whether we buy it or whether they're owned by third parties. And they've just started down the path on that. And today there's 2 third-party management agreements that they have with fairly institutional and sizable owners. And I think both of those have been pretty happy with what Generator has been able to deliver financially and operationally in terms of creating value in their real estate. So that's a piece that we think can continue to scale both organically through what we call asset-light growth, whether that's through new management agreements or new leases, and then also through asset-heavy growth, which is where we would leverage our capital and balance sheet and deploy to buy additional real estate and grow the company.
Yeah, nice to have options. And as you said, Liam, we're at this juncture where the deal is done. We get to look ahead. What are some of the other things that we're maybe eyeing or prioritizing as we partner even more closely with Generator and the team?
I think for us today, there's a bit of work to be done on the existing portfolio, what we would call some TLC or 10 or 11 care from a capital investment perspective. So just modernizing the product, continuing to keep it relevant for today's generation and the shift in consumer interest, and also upgrading and modernizing some of the components that, while they were innovative 7 to 10 years ago, are more commonplace in the industry today. So there's capital investment in the existing assets to keep the brand and the assets relevant. And then, as just mentioned, there'll be a lot of focus on growth, both on asset heavy and asset light.
I'd just add what we'll look to do is to leverage our experience at Brookfield in terms of building institutional quality platforms and bringing our best in class procedures around the core areas of the business. So we really respect what the Generator management team has done over the last 10 years. They've built an incredible business that we really rate. But I think a huge part of this is while we're looking to transform some of the existing assets and grow at a substantial scale, we want to make sure that we're not losing the identity of Generator as a brand or the best practices that the team has already done. We will look to supplement that and grow that alongside the growth of the portfolio.
We've had other teams on here, and it sounds like this is another one of those like taking something from good to great. Like it's already really solid, and it's really just about letting it get to its natural next evolution.
Yeah, absolutely. I think what the team did really well is first identified fantastic real estate across key gateway cities. They then learned how to manage it in a market leading way. But we believe that there's a next step that we can take as Brookfield to help continue the institutionalization of this platform while we scale it. So it's a great place to be and a really fortunate opportunity for us to work with such an amazing company.
It's exciting. As you said, you've been tracking the space a long time, and the actual process to get the deal done maybe took longer even than you expected. Is there anything you learned through diving into this sector or this company that surprised you that you didn't expect or that you thought might go a certain way that maybe went totally the opposite way?
Yeah, so I have one kind of fun fact. Starting with the sector, we always knew that the majority of the business would be your earliest traveler, whether that's under 18 or just over. But surprisingly, as we look across the demographics of the existing business, around 6% of the demand is actually from customers over the age of 50. And when we look at over 40, that's about 14% of the business. So I think part of that is families that are taking their kids and extended family to travel. But you also do have some solo older travelers that are taking the shared beds and the shared rooms. And I think they enjoy the social aspect of it. And based on talks with management, they effectively become somewhat of a group mom or grandma or granddad for the other younger folks that are there, giving them guidance around things to do and tips and so on.
I have to say that after almost a decade of studying the business and following it from afar, we spent a lot of time getting to know the sector and the business. So there's definitely a ton to learn, but there hasn't been too much of a surprise, at least for me personally, to date. I think there will be a lot of things to uncover along the way, and we're really looking forward to digging into executing our business plan. But so far, I think it's a great fit for Brookfield in terms of the business model, the locations, and clear opportunity for us to add value through growth and through our operational expertise. So honestly, no major surprises or roadblocks so far, but I'm really excited to see where it'll go.
Do you guys get to go and spend a research night in a Generator location? Has anyone done any on-the-ground research?
We've seen all the assets over the years, and actually a decent amount of the team has gone and seen some of them subsequent to the acquisition. So yeah, we do get to see them, which is quite nice. And they're all quite full of life in terms of not only the number of people in the property, but there's definitely an atmosphere in the common areas and the F&B, whether that's the bar or the restaurant.
Cool. All right, well, I'll put it on my list. I got to plan my next trip. Now I know where to go. It was really great to have you both. Thank you for joining us today.
Great. Thank you so much.
Thanks so much for having us.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.